What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 12, April the 25th, 2023. We made some trades today, so let's get into it. So coming into today's session, my goal was to properly trade the setups that I know, and most importantly, have fun. I think over these past couple of days, I've been stressing over my trades way too much, and that's not what I want to do. I want to come in, I want to trade the session, and I want to have an enjoyable experience. So more than anything, that was my major priority for today. So before we get into our analysis, let's break down what these levels on the chart represent. So this blue line up here at 34,008 represents the closing price for April 24th, which was yesterday. The purple line right here represents 33,948, and that was the closing price from Friday on the 21st. And the orange line down below represents the closing price from Friday at 33,919. And all of these levels played an important role throughout the day, as we're about to see. So let's start our analysis at 9:30. Notice how around the open we were pushing up off of Thursday's closing price, and when the market opened we pushed away from that price and had a huge move to the upside. Now if you guys remember yesterday's session from day 11, we almost had an exact carbon copy of what happened today. So this was yesterday. This was that same closing price down here at the orange line, and look at what happened when the market opened. Huge move to the upside, then we immediately pulled back, and then it was an uptrend for an extended period of time after that. So if we look at today's session, look at what happened. We started off at Thursday's closing price down at the orange line. When the market opened, we immediately pushed up off of it. We pulled back, and then we started the uptrend that lasted for a good amount of time, about the next 30 minutes, right? So that's interesting to see how certain things in the market, they don't happen exactly the same, but it's similar enough where you can recognize the patterns and say, I understand what I'm looking at. So once we pushed up, we pulled back to retest the purple line, which was Friday's closing price, and then we created this higher low right here. So once I saw that, that's when I drew my trend line. So I drew a trend line from this bottom up through this higher low, connected to this higher low and this one. And then when you eventually end up with your trend line, you'll end up having a touch right here where I went long at trade one. So I went long in anticipation of the trend line being respected. So I was expecting for prices to hit off of this trend line, create a higher low like they did, and then make a new high. But that just wasn't in the cards, because if you look, we actually created a lower high. If you look at the top, the highest price we made up here at 32,990, when we pulled back, we weren't able to push past that price. So that's not a good sign for the buyers. That's a better sign for the sellers, because they're saying, oh, okay, the buyers are not able to make a new high. And then we pushed down and created this lower high. So when I saw this lower high form, in addition to the fact that this move took too long to happen, that's when I exited early at A1. Now when I talk about moves not happening in enough time, when I trade certain setups, there's a certain amount of time that it takes for the setup to work, and if it takes longer than that, you don't necessarily just throw the setup away, but you start becoming a lot more skeptical, and you also look at the price action in addition to the time. So I was looking at the price action, and let's zoom in a little bit so I can show you exactly what happened. So I went long right here on candle one. Now immediately after that, on the next candle, we pushed up. That's good. The next candle after that, it was red, but look at the bottom of the wick. It was not able to break the opening price from the candle from before. So that's a good sign for the buyers. That's telling us that even though the sellers were dominant on that candle, the buyers still held up and respected the levels of support that they needed to. We look at the next candle. It's a doji, but the wick is still higher than the one from before and the one next to it. So it's like, okay, we have a little bit of sign that the buyers still want to push the market up, but the sellers are showing that, hey, they want to push the market down also, because remember, this is the top, this is the lower high, and this is the next lower high. And then on this candle, it's hard to see, but on this doji, we were actually green for a good minute. So imagine this candle, the doji, but imagine it when it was green and it was all the way at the highest price for that specific candle. If you were a bull, you would have been very happy and said, oh, okay, Now we're moving up and we're about to make that new high that we're expecting. But this candle closed as a doji in the last 2 seconds. So that's a big fake out sign when your candle is closing in your direction and then in the last second of the candle it automatically reverses. When I saw that, I was like, okay, that's not exactly what I want. And then you combine that with the fact that it took about 1, 2, 3, 4 minutes for prices to show that they didn't want to move higher. That's when I got out. So I'm glad I was able to do that because it ended up protecting me from that big huge drop right here at A1. So once we dropped down, we came all the way back to Thursday's closing price at the orange line at 33,919. Now look at how that move happened and look at how important these levels of support or resistance could be based on closing prices. We had all of this momentum coming to the downside and they came all the way back down to Thursday's closing price. But when they got there, it was nothing but buyers at that level, and the selling stopped immediately. One wick, and that was all. So we pushed back up to Thursday's closing price. Well, excuse me, Friday's closing price at 948, and then we pulled back, created a higher low. So let's zoom in right there. Because if you guys know me, you know one of my favorite setups that I talked about on almost all of my streams is called a downtrend reversal with a higher low that gets established. So this is exactly what happened. So we had strong downtrend, strong move against the downtrend. We came back, created a higher low, and then we came back to retest that higher low on this wick. And then when prices moved away from that support level established by the higher low, that's when I went long. So let's actually take a look at an example of that to show you exactly what I mean. So this is actually the chart from yesterday where we had a up move and then a strong down move. Now after the down move, we made a bottom, created a higher low, came back to retest it, and then when prices move away from that level, that's when you go long. Let's see, what's another good one? This one is very good. Strong downtrend, and then we establish a bottom, create a higher low, move away from it, come back to retest it. When it retests it and it moves away from the support level, you go long. So you had an opportunity to go long on this one, and you had an opportunity to go long on the second touch as well. So these patterns happen very often throughout the market, and when I see them, I just try and identify them and trade them the right way. So I think today I did a good job of that. And when prices came back to the support level, I didn't hesitate. They moved away from the level and I went long. Took prices all the way back up to what I thought was resistance up near where we created the previous tops from earlier in the session. So overall, that's what I want my trades to look like. I want to be able to come in, be patient enough to wait for my setups. When I see my setups, I identify them. I'm patient enough to wait for the setup to completely form, and then when I see my entry signal, that's when I go long. So I think overall today, man, I did a good job. I followed my plan on both of my trades. On trade one, I went long based on the trend line, and then when my reasons for getting into that trade no longer existed, I quickly and immediately got out. So that's me following my trading plan right there. Check. Trade number two, we saw the downtrend reversal with the higher low get established. When prices moved away from the support line, we went long and we held our prices and we held our trades all the way to our price targets. And when they got there, we didn't hop back in. We didn't try and double dip after the trend was over. We did our thing. We got in, we got out. We followed our trading plan. Check. So that's what I want to come in and try and have most of my sessions be. I want to be patient and let everything that I know just come to me. So overall, when I go into today's back testing session, I'm gonna work on being patient and focus on taking the trades that I know and trading them the right way. So today is day 12. I appreciate you guys for tuning in with me, man. Tomorrow is day 13. I'll see you guys at 9:30 a.m. sharp. And until then, take it easy.